Pullback is one of the most powerful strategies that most professional traders use to cash huge pips in a trending market. It is advisable to use pullback strategy when the market is trending, when we are able to establish a valid trend market, either uptrend market or a downtrend market. Looking at pounds against US dollar 4 hours time frame, we can clearly see that the market is already in an established downtrend market on 4 hours time frame. For the past few days, market has been consolidating around this place, giving us a rising wedges that signify the continuation of the bearish movement. From the current market pattern, we can clearly see that we have an uptrend line like this, from this lower trough to this second trough, and we have huge momentum of sellers that broke this uptrend line to the other side. The sellers has taken out the recent higher low, whereby we have current lower low. Now we are expecting in the future for market to give us lower high for the continuation of the bearish movement. The next thing to figure out in the market is to mark out the major level. We can see clearly that we have our major level around this zone. Remember, as a technical analyst, history is very, very important when you are doing your technical analysis in the market. Now, in the future, we are expecting market to come back to tap this broken support onto resistance and the broken uptrend line. We are expecting market to give a retest back into this zone, acting as resistance for the continuation of the bearish movement. The next tool to use is Fibonacci retracement level, by connecting from the recent lower high to the recent lower low. Remember, our aim is to catch the pullback in a trending market. The current structure of the market is already bearish structure. Let's play the candle. You can see that the market has gone up to tap the major resistance level and a broken uptrend line turned to resistance for the continuation of the bearish movement, and the price is now at the Fibonacci 100% retracement level. Now our target is to make use of our pullback strategy at the Fibonacci extension. It is advisable to use pullback strategy at the Fibonacci extension, adding some other confluences with your trading ideas before you take any decision in the market, either to buy in a downtrend market or to sell in an uptrend market. Now we're expecting market to come down to the Fibonacci extension level for us to be able to buy the market to the upper side with our valid entry signal. Remember, if price come to the Fibonacci extension level and we are unable to spot our entry signal, we are not going to trade it. We have to wait for price action to give us the presence of buyers around this zone for us to be able to buy the market to the upper side. Let's play the candle. Let's continue the candle replay. You can see that the market has gotten to the Fibonacci extension level. Now we have to go to the 1 hour time frame to spot our entry signal. Remember, what are the confluences that we are looking for at our entry signal, which is Fibonacci extension level? The Fibonacci extension level is also acting as a support, whereby we have a major support level around this zone. We also have our psychological level around this zone. The next thing we are waiting for is the entry signal. We need price to talk to us. We need presence of price action that represent the presence of buyers in the market for us to be able to buy the market to the upper side from the Fibonacci extension level. That is when the pullback strategy come in place. Don't use pullback strategy when the market is not trendy. You need a valid structure, either bearish structure or a bullish structure. The current structure that we have now is a bearish structure that represents a downtrend movement in the market. Now the next thing to look out for is our entry. Let's study the price action around our point of interest. At our point of interest, we can see clearly that the market is already giving us hammer, and hammer is a bullish reversal pattern. We have an indecision candle with engulfing, which is bullish engulfing at our point of interest. Let's watch out for the next candle. We have an indecision candle as well. Now we have a bearish candle, which is hammer. At the end of the downtrend movement, price is giving us a formation of bullish candlestick pattern. We have hammer, indecision candle, hammer, then hammer. You can see another hammer acting as a pin bar around this zone, and the combination of these two candles is tweezer, which gives us a tweezer bottom, and a tweezer bottom candlestick represents bullish reversal pattern. And we can see that we are able to spot our bullish candlestick pattern at our point of interest that represent that it is time for buyers to ride the market to the upper side. This is when our entry signal is going to start from. And another thing that we are able to spot in the market is that market gave us a W pattern. You can see a W pattern around this zone for the continuation of the bullish movement. Now we have our entry signal around this zone. We are risking about 34 pips to cash over 100 pips. You can see the market is already moving in our favor, moving in our favor, moving in our favor. You can see the market is already approaching our take profit level.